what is your view on analyzing related party transactions in their entirety rather than isolating individual elements that are considered when identifying the arm's length price? To answer that, when analyzing related party transactions for transfer pricing purposes, it's important to consider whether whether to evaluate the transaction in its entirety or to focus on isolating individual elements. Okay. This choice can significantly influence the accuracy and defensibility of the analysis. So let's explore why a comprehensive approach looking at the transaction as a whole often proves to be more aligned with the arm's length principle. So firstly, analyzing the transaction in its entirety provides a clearer reflection of its economic reality. In many cases, related party transactions are not isolated. So one of the arrangements, rather, they are components of a larger integrated business model. Okay. So for example, a supply chain might involve manufacturing, marketing, and distribution activities that are closely interdependent. Evaluating only one aspect, such as the manufacturing function, can lead to an incomplete understanding of how value is created and shared across the parties involved. A holistic view ensures that we capture the interdependencies and synergies that influence pricing and profitability. So this approach is not only logical, but also aligned with the guidance provided by the OECD transfer pricing guidelines. These guidelines emphasize that highly integrated or complex transactions often require a broader perspective. So for instance, when we're using the transactional profit split method, the analysis inherently considers the combined outcomes of all related parties in the transaction. So this methodology reinforces the importance of evaluating transactions collectively rather than dissecting them into isolated elements. Okay. So taking a holistic view also has practical benefits when it comes to risk management. So by analyzing the entirety of the transaction, we reduce the risk of cherry-picking specific elements that might skew the results in favor of one jurisdiction over another. This comprehensive approach provides a stronger, more defensible basis in the pricing if the pricing is challenged by the tax authorities. Additionally, it helps ensuring consistency in how profits are allocated across jurisdictions, which is key to minimizing the risks of double taxation. We have to also consider that there are challenges. A complete analysis often requires extensive data and a deep understanding of the business model, which can be resource intensive. Not every transaction warrants this level of scrutiny. Obviously, simpler cases such as a one-off commodity sale may be appropriately analyzed on an individual basis. The complexity of transactions and the materiality of the potential tax risk should guide the depth of the analysis. So let's have a look at an example. So let's imagine a multinational enterprise where a licensing agreement governs the use of valuable intellectual property across multiple jurisdictions. The royalty payments arise from this agreement can't be fully understood in isolation. They must be assessed in the context of the entire licensing agreement, taking into account the economic value created by the intangible asset and their role in the broader value chain. So similarly, in an integrated supply chain, each function, whether it is manufacturing, marketing, or distribution, contributes to the overall profitability. Analyzing only the manufacturing arm might ignore the critical role played by marketing intangibles or distribution channels in generating value. So in closing on this question, while there are cases where isolated elements of a transaction might be sufficient, analyzing related party transactions in their entirety is essential for complex or integrated arrangements. This approach aligns with the economic reality of how multinational businesses operate, ensures compliance with the arm's length principle, and provides robust foundation for addressing potential disputes. Ultimately, the decision here on whether to adopt a holistic or isolated approach should be guided by the nature of the transaction, the risks involved, and the practical constraints of the analysis.